So most of the traders lose money in the markets, but why is that? It's not because they don't know how to trade, but it's more because they don't know how to think like an actual trader. And Mark Douglas figured that out pretty early. He wasn't some trading guru, he was just a guy who blew up accounts like the rest of us and wanted to understand why it was happening. So what he did, he studied his own mistakes, he watched other traders, and he quickly realized the problem wasn't the strategy, it was the mindset behind it. And that's why he made his book, Trading in the Zone. And that's what it's all about. It's not about the charts, it's not about indicators over your charts, not the setups. It's just pure mental focus and also emotional control. So this video is part of the Mental Edge series where we dive deep into the real edge of your trading, which is your own psychology. Mark Douglas's biggest insight was this: you don't need to know what will happen next in order to make money. And at first that will sound really weird, but if you think about it, even your best trade can lose you money, and even your worst trade can win you money. So what matters isn't being right every time, it's more thinking in probabilities. Because professional traders know one trade doesn't mean anything. What matters is doing the same thing over and over again with discipline. That's also how the casinos make money on you. And it's how successful traders also build long-term results. And in the Mental Edge series, this is one of the core lessons. So you have to stop chasing certainty and start thinking like a probabilistic machine. So another thing that Mark Douglas learned pretty quickly is that emotions will ruin your trades. Fear, doubt, greed. They make us close trades too early, hold them too long, and Mark said the best traders don't get emotional because they've accepted the risk of the trade in advance. So when you truly accept the risk that you might lose, you stop stressing about every single trade and you just focus on your plan. And that's the mindset that the pros adapt. They don't react, but they respond to the markets. And that's what the Mental Edge is all about. It's about building the emotional discipline that most traders will skip because they are too busy finding the golden nugget with harmonic patterns, Elliott waves, whatever strategy they follow. When focusing too much on the strategy they want to follow, they forget to stress their own emotions during their trades. Even Mark Douglas wasn't always like this. He started trading just like us, trying out different strategies, chasing wins, blowing up accounts, and everything changed when he only stopped tracking his trades, but he also started tracking his thoughts. He journaled his emotions, he paid more attention to how he felt before clicking any buy or sell button, and slowly over time he stopped overtrading. He stopped getting emotional and his results became very consistent. And this was not because he found the perfect strategy, but because he mastered himself. And this transformation is at the heart of the Mental Edge series, because the real change will start with yourself. So to give you some insight into my own trading experience and building up my own confidence in my trades, I want to show you two trades of mine I took last week. This was the first of the two trades where it entered my target area of interest, where it broke this low to the downside right here, and this is where I entered the trade short to target this imbalance. If you want to know more about my trading strategy and want me to explain more about it, comment it down below, because it's not my main reason to start a YouTube channel. But if people are interested in it, I will share what I'm trading and how I'm trading it. But what happened in this trade is that it went into my direction, close to my target. So I was like 3K in profit right here. And that's when price reversed a little bit just before going straight to my target. What I did in the meantime, after it almost hit my target right here, I trailed my stop into break even because I entered at this gray line. After that, it was past this low, and my trading plan tells me that if it breaks a recent low, I have to trail my stop loss to break even. So that's what I did. It quickly reversed back on me. Stopped me out in profit. It was like $200, I believe. And after that it ran to my full target, which was about 4K. After this I could have done two things. I can remain calm and not think about it and focus on the next trade, or I can start getting mad, revenge trade, open a new position, doing stupid stuff. and ruin my win rate, because I know I have a win rate of around 70%. So the probability of my next trade being a winner is pretty high. So why should I do stupid stuff, re-enter, not following my plan, if I know that my next trade probably is gonna be a winner? So yeah, I did the first thing, which was waiting for the next opportunity, and I took that later in the week, and I will show you it in a few seconds. But yeah, what I want you to take away from this is, whenever something like this happens, you were up a profit around 3K, it reversed on you, got stopped out around 200 bucks, and then it reversed and hit full target and even more. Yeah, it's stupid to make impulsive actions and re-enter the market. What you should do instead is just wait for the next opportunity. So that is exactly what I did. I waited for my next opportunity, which was a few days later. This trade also hit my higher time frame objective. After breaking this high to the upside, I entered the trade long to target this high. Also again on the 5-minute time frame. And this shows to you just waiting patiently for your next opportunity really pays off. Because I could have just revenge traded my previous trade and take probably an extra loss, or just wait for the next opportunity and take a nice win, which was around 4.5K. So just waiting patiently for this trade instead of revenge trading after my previous trade, which got stopped out at almost break even around 200 bucks. It made me 4.5K instead of losing 2K. So that's a really big difference. Revenge trading almost every time is a very bad idea, because you're going in with a lot of emotion, you're not paying attention, you're just trying to prove yourself. And yeah, it will almost certainly mess up your win rate and also your mental capacity. So here's what we can all learn from Mark Douglas. You don't have to be perfect all the time, you don't have to win every trade, but you just need to stay calm. Stick to your edge and think in probabilities, because that's the real mental edge over the long run. And if you want to grow as a trader and don't just study the market itself on a technical basis, but also study yourself to get to know yourself better, know your emotions. And if you're serious about building that edge, you want to stick around, because I'm making more content in the near future and it will be really helpful in building up that edge. So thank you for watching, please consider subscribing, and I'll see you in the next video.